This video course is about something that I've only really seen talked about once before. So even though it's probably, when I start explaining it, it's probably pretty self-evident, it's really something, in my opinion, that flies below the radar, and I just never see it discussed. And the reason I'm making this video course is because I think that it is actually a very important part of trading, and that if you can start to recognize market rhythms, that it's another layer of prediction that you can put on top of your analysis. Because in trading, when we take a trade, we are predicting what's going to happen in the future, and in order to predict what's going to happen in the future, we have to look at the past. So one of the things that's very important, particularly when you're using the multiple time frames to enter a trade, is to recognize how friendly the environment that you're entering is. And I'm just going to show you a really quick example here before I actually go on with the course. So for example here, if I just shrink that a bit here, you can see that you've got the pound Aussie daily chart, and you've got an upward moving channel. And for example, if we were just thinking, right, okay, we're going to trade the channels, we're going to try and find a move inside the channel, and we're going to find a place of entry. Let's say we were going to go short here and exit here, and then we were going to go long here and exit there, and go short there and exit there. Let's say that was our strategy, okay? On the surface, that seems like a perfectly reasonable strategy, okay? But if you actually look closely at the type of price movement within the channel, you can see that price movement changes from something that's relatively easy to trade to something that's actually is quite difficult to trade. So if, for example, you compare this move here, this downward move here, with this move here, okay, you can see that this move here had a lot more trouble getting down to the opposite side. So for example, let's say this is the first touch of the upper trend line. This move had a lot more trouble getting down to the opposite trend line than this move had getting to this opposite trend line. Okay, and that's something as traders that we just accept. We just take that for granted, because after all, how can you know in advance how this move is going to play out as compared to this move? And that's really what this video series is about. It's about being able to spot the transformation of rhythms in the market. So what you can see here, for example, is you can see that in the next move down, the rhythm is starting to change, and it starts to have a big pullback, okay? And then in the move up, you start to get a lot of sideways movement going up, and then you get a lot of sideways movement here pulling back, okay? So you have a big sort of area of resistance that's formed here, which is then followed by a lot of choppy movement on this area of support. But this didn't just happen. You know, this actually gradually evolved by way of how these waves started to transform themselves, okay? And the point I'm trying to make is that hopefully in the following videos I will be able to explain to you how to be able to spot these type of changes as they are playing out, and to be able to predict which waves are going to be easier to trade than others, and how to stick to the easy trades rather than the difficult ones, based on the rhythm of the markets. So you know, this is more of an art, not a science, but it's something that I think it adds another layer of probability onto your analysis. And if you can actually add this, you know, really get to grips with this and add it to your trading, I think that you'll find it a very, very valuable addition. So with that said, let's get on with the video course.